There's a shift happening in Central Alberta real estate right now. And honestly, if you only looked at one headline, you could get this market completely wrong. Because, yeah, there are more homes available in several communities. Red Deer has a lot more inventory than last year. Sylvan Lake has more inventory. Lacombe has more inventory. So the easy assumption would be more homes for sale must mean prices are falling. But that's not really what's happening. In fact, when we look at the first half of 2026 compared to the first half of 2025, average prices are up in Red Deer, Lacombe, Sylvan Lake, and Blackfalds. So this is not a simple market. It's definitely not a crash market. It's not a boom market. This is what we call a selection market. And that means buyers have more choice, sellers have more competition, and the homes that are priced, prepared, and presented properly are still performing. But the homes that miss the mark, those are the ones starting to feel the shift. So in this video, I'm going to break down what is really happening in Red Deer, Lacombe, Sylvan Lake, and Blackfalds from January 1 to June 30th, comparing 2026 to the same period in 2025. And I'm not going to bury you in every decimal point because that's not what helps you make a better decision. What matters is the pattern. And the pattern is very clear. Inventory is up in several places. Sales are down in every market we're looking at, but prices have not collapsed. So the real question is not, is the market good or bad? The real question is, where is this market going? And where is it softening? And what does that mean if you're buying or selling before the keys change hands? Because in this market, the headline gets attention, but the details make you the money. Let's start with Red Deer. Red Deer is the best place to begin because it gives us the biggest and clearest signal. There are more homes, more property types, and more transactions, so it helps us understand the overall direction of this market. And in Red Deer, the biggest headline is this. There's a lot more inventory than last year. Roughly 400 more homes are in the inventory pool compared to the same period in 2025. That is a meaningful jump. But here's where part of that matters. That increase does not appear to be because of a flood of new sellers suddenly rushed to the market. New listings were only slightly higher than last year. So if new listings barely changed, but inventory rose, what does that tell us? It tells us homes are taking longer to move through the market. Supply is building, not exploding. It's just building. And that difference does matter. Because when supply explodes, that can create panic. But when supply builds while prices hold steady, that usually points to a more balanced, more selective market. And that's exactly what Red Deer looks like right now. Sales were a little lower than last year, not dramatically lower, just lower. But even more inventory and fewer sales, prices were basically flat to slightly up. The average price in Red Deer moved from just under $410,000 last year to just over $413,000 this year. The median price also edged up slightly. So that's the story. There's more homes available, a little less sales activity, but prices are holding. That does not scream collapse. It screams caution. It screams price sensitivity. It screams buyers are now having options. But it does not scream distress. And when we break down Red Deer down by property type, the story gets even a little more interesting. Detached homes are holding up well. There are more detached homes available this year, but the number of detached sales was exactly the same as last year. Crazy, right? But that's a big deal because it means buyer demand for detached homes did not disappear. Buyers just had more to choose from. And prices for detached homes were basically unchanged. So if you own a detached home in Red Deer, the market is not saying no one wants your house. The market's saying you have more competition. And that is a very real message. Your enemy is not necessarily the market. Your enemy is just trying to blend in. Because when buyers have more options, they do have, they don't have to chase average. They choose from the home that feels like the obvious winner, the one that shows the best, the one that is priced correctly, and the one that makes the next house feel overpriced. That's the game now. Attached and semi-detached homes in Red Deer are also relatively steady. There's more inventory in that category too, but sales were only slightly lower and the prices also held up as well. So again, buyers have more choice, but values have not fallen apart. The softer spot in Red Deer is apartments. Apartments were noticeably lower than last year, and apartment prices moved down. That matters because it shows why broad market headlines can be misleading. If someone says Red Deer prices are up, that is technically true overall. But if you own an apartment, your experience may be totally different. And if someone says Red Deer inventory is up, so the whole market must be weak, that is also way too simple a statement. Detached homes are telling the story. Attached homes are telling another. Apartments are yet telling another story. So the real story in Red Deer is this: detached homes are resilient, attached homes are competitive but stable, and apartments are softer. And the overall market is moving from urgency into selectivity. Now let's move to Lacombe, because Lacombe may be the most surprising market in this entire report. On the surface, Lacombe looks like it should be softer, right? There were more homes available, there were slightly more new listings, and sales were lower. So if you stopped there, you might assume prices would be down, but they're not. They're up, and not just a little. The average price in Lacombe was up almost 7%. The median price is up nearly 11%. That's a very strong move. So now we have the tension. How can there be more inventory, fewer sales, and yet higher prices? That's where this market gets more sophisticated. It likely means the mix of home selling has changed. It may also mean buyers are still willing to pay for that right property, especially detached homes, but they're not buying everything indiscriminately. And that's the key. The market is not rewarding everything, it's rewarding the right things. Think about that. Detached homes are really carrying the Lacombe story. Detached inventory was actually lower than last year. Sales were higher too, but the homes that did sell sold at a much stronger price levels. The average detached price moved from mid 440s to around $481,000. The median detached price moved from the high 420s to around $485,000. That is a major shift. So detached homes in Lacombe are not just holding, they're helping pull the overall numbers up. But sellers need to be careful with that information. This does not mean every seller can just add 10% to their price and expect the market to clap their hands and for it to sell. It means the homes are selling, okay, they're selling at stronger price levels. That's the difference, a huge difference. Because when sales volume is lower, the buyers who are active are usually more intentional. They know what they want, and they're not casually throwing offers at everything. But when that right home appears, they're going to stand up at attention, okay? Attached and semi-detached homes in Lacombe are a totally different story. There is much more inventory in that category than last year, but sales were almost the same. And prices, they were stable. So if that segment is not weak, but it is more competitive, buyers have more choice, sellers have to be sharper. Apartments in Lacombe are a very small sample size, so I'd be careful about reading too much into that category. But overall, the Lacombe story is clear. Activity has cooled a little, prices rose, detached homes carried the market, and the right properties are still getting paid. Okay, let's talk about Sylvan Lake. Sylvan is different because it's not just a housing market. It's a lifestyle market. People don't buy Sylvan Lake for just bedrooms and bathrooms and square footage. They buy because of the lake. They buy the lifestyle. They buy that summer activity place, and then they buy the community. They buy the idea of living somewhere that feels a little bit different. And that matters because lifestyle markets can hold the buyer's attention even when people become more selective. In Sylvan Lake, there is more inventory than last year. Sales were slightly lower. New listings were actually lower. So again, this does not look like sellers flooding the market. It looks more like homes taking longer to move through the market. Supply is building because buyers are taking their time. Now, the price story in Sylvan Lake is mixed. The average price was up slightly, but the median price was down slightly. That's important. When the average price and the median price move in different directions, it usually means this mix of sales. A few higher price sales can really pull that average up, but the median tells us the middle of the market may be feeling a little softer. So Sylvan Lake is not weak across the board, but it's not universally strong either. It is segmented. Okay, detached homes in Sylvan Lake are still showing great strength. Okay, there were more detached homes available and there were fewer detached home sales, but prices still moved up. That tells us detached demand is still there. Buyers may be more selective, They may have more choices slightly, but they are still willing to pay for the right detached home. Attached and semi-detached homes in Sylvan Lake may actually be the strongest surprise of this data. Inventory was almost the same as last year. Sales were up, prices were up, and that is a very healthy signal. And I think part of the reason may be affordability. Think about it. When detached homes become more expensive, some buyers don't leave the community. They change the property type. They still want Sylvan Lake. They still want that lifestyle. They still want that location. But instead of stretching into a detached home, they move into an attached or a semi-detached option. That's how that demand shifts. It does not always disappear. Sometimes it slides sideways into a more affordable category. Apartments in Sylvan Lake were definitely softer. Sales were lower and prices moved down. So again, property type matters. The Sylvan Lake story is this. Detached homes are holding. Attached and semi-detached homes are performing very well. Apartments, yeah, they're softer. And the overall market looks mixed because each segment is telling a different story. Now, let's move to Blackfalds. Blackfalds is where the tone changes. Red Deer has more inventory but stable prices. Lacombe has slower activity but stronger prices. Sylvan Lake has more inventory but still has strength in detached and attached homes. Blackfalds is different. In Blackfalds, inventory was actually lower than last year. New listings were lower and sales were much lower. So the issue in Blackfalds is not so much supply. The issue is reduced activity. Fewer sellers, fewer buyers, fewer transactions. The market is slightly quieter. And that's an important distinction because a quieter market is not the same thing as a flooded market. It's not even close. In a flooded market, sellers are competing against a wave of supply. In the quieter market, there may be simply just fewer people moving there, fewer buyers making decisions, fewer sellers listing, less overall momentum. And yet, even with that lower activity, the average price in Blackfalds was still up. The median price, however, was down. So once again, the headline and the lived experience may not feel exactly the same. The average can look fine, while in the middle of the market, it feels a little softer. Detached homes in Blackfalds are still showing price strength, okay? There were fewer detached listings. There were fewer detached sales, but detached prices moved up. So if you're selling a detached home in Blackfalds, the good news is values have not collapsed. But the caution is this. You cannot assume the same buyer traffic as last year. There are fewer transactions happening. The buyer pool is a little bit thinner. The serious buyers are still there, but there are fewer of them. And when there are fewer active buyers, every showing matters more. You cannot afford weak photos. You can't afford lazy pricing. You can't afford to test the market for 3 weeks and then wonder why showings slowed down. In a quieter market, momentum matters more. Attached and semi-attached detached homes in Blackfalds also held up better on price than the sales volume might suggest. There was more inventory in that price category. Sales were lower, but prices were still relatively strong. Apartments were the softest in Blackfalds. Prices were down meaningfully in that category. So the Blackfalds story is this. Market is quieter, activity is lower, detached pricing is still holding, but sellers need to be very careful because fewer buyers means fewer chances to get it right. All right, let's zoom out a bit because this is where the real lesson is. Across these four markets, the easy headline would be inventory is up, sales are down. And that would be true in a broad sense, but it would not be useful enough. The smarter interpretation is this. Central Alberta is shifting from a speed market to a strategy market. In a speed market, almost anything decent gets attention quickly. Buyers feel urgencies, sellers feel control. Pricing mistakes can sometimes be forgiven. Presentation mistakes can sometimes be overlooked. But in a strategy market, buyers slow down. They compare, they negotiate. They notice the difference between a home that is properly prepared and one that was just thrown online. This is the kind of market where the best listings still look strong and the average listings start to expose themselves. That is why price can remain stable or even rise while sales decline. Because the market's not saying no one wants to buy. It's saying buyers are more selective about what deserves their money. And that is a completely different message. And it matters whether you're buying or you're selling. For buyers, pay attention. This market may actually feel healthier than last in many ways. You may have more choice. You may have more what you feel is breathing room. You may not have to panic offer on every property, but that does not mean you cannot sleep on the good ones, because the best homes are still the best homes. And when something is priced right, shows well, and matches what buyers want, it can still move, and it can still move quickly. So buyers should not confuse more inventory with unlimited leverage. More inventory gives you options, but it does not automatically give you a discount on the right property. This is one of the biggest mistakes buyer can make right now. They see more homes sitting online and assume the entire market is weak. But that is not what the data is showing. The data is showing a more selective market. This means some sellers may be more negotiable, some listings may be overpriced, some properties may sit longer. But the right home in the right area at the right price can still attract real interest quickly. So as a buyer, the opportunity is not necessarily that everything is cheaper. The opportunity is that you can maybe be a little bit more selective. You can compare more carefully. You can maybe make a smarter decision. And in some cases, you may have more negotiating room than you had last year. But you still need to know the difference between a stale listing that is overpriced and a quality listing that's simply sitting in a more balanced market. Those are not the same thing. For sellers, the message is even more important. This is not the market where you casually throw a number at the wall and hope someone falls in love. This is not the market where you price basically only on your neighbor's best case scenario sale from last year or the year before. And this is definitely not the market where you ignore presentation, assume buyers will just figure it all out. They will not figure it out. They have options now. In Red Deer, buyers have more options. In Lacombe, buyers have few, but are still paying for quality. Sylvan Lake, the market is segmented and property type matters. In Blackfalds, activity is lower, so every showing matters more. That means your listing has to do three things immediately. First, it has to look like it belongs in that price point. Okay? Secondly, it has to create confidence in that buyer. Third, it has to feel like one of the best choices in the category. Not the best home in the city, the best choice in its lane. That's the key. Because buyers do not compare your home to the entire market. They only compare to the handful of homes they could actually buy or maybe have already looked at. Your competition is not theoretical either. It's active, and it is online, and it is showing up right beside you in the search results. And before a buyer ever books a showing, they are judging your home against every other option on their screen. That is why pricing, photography, preparation, timing, and positioning matter way more now. Not because the market's bad, because the market is more discerning. So here's the cleanest way to think about this report. Red Deer is stable but more competitive. Lacombe is slower but stronger on price. Sylvan Lake is segmented but resilient. And Blackfalds is quieter and more sensitive. That's the market, not one story, 4 different stories. And inside those 4 stories, each property type has its own story too. This is why local advice matters, because when a generic market update will tell you inventory is up, but a real marketing strategy tells you that actually means for your specific home, your specific budget, and your specific timeline. And that is also why the average price alone does not tell the full story. Average price can be a better sense of the middle of the market, the sweet spot, so to speak. And property tells you what is actually happening to homes like yours. That is why you cannot just ask, is the market up or down? You have to ask, which market, which property type, which price range, which buyer pool, and lastly, which strategy. Because that is where the actual answer lives. If you're planning to buy or sell before the keys change hands, the worst thing you can do is make a decision based on headline. The second worst thing you can do is use last year's strategy in this year's market, because 25 and 26 are not behaving the same. In 26, buyers have more options in several markets, and they are using that choice. That means sellers have to earn that attention. Buyers have to understand that leverage. Both sides need to know where that strength actually lies. So here's the bottom line. The Central Alberta market is not falling apart, not even close, but it is changing. Inventory is building in Red Deer, Lacombe, and Sylvan Lake. Sales are down in all 4 markets we looked at. Prices, however, are not collapsing. Average prices are still up across the board in those communities, but underneath that, there are clear differences. Apartments are softer in several places. Detached homes are holding up way better. Attached and semi-detached homes are benefiting in certain communities from affordability demand. And the gap between well-positioned listing and an average listing is getting wider. That's the real shift. Not crash, not chaos, separation. The good listings separate from the average ones. The serious buyers separate from the casual ones. The smart strategies separate from the lazy ones. And that is why this market can feel confusing if you're only looking at one number. Inventory says buyers have more choice. Sales say buyers are moving more carefully. Prices say demand has not disappeared. Together, they tell the truth. That is the market where you can still win, but you cannot wing it. So before you buy or before you sell, before you price a home, before you write an offer, and definitely before keys exchange hands, make sure you're looking in the right data for the right property in the right community. Because in this market, the headline gets the attention, but the details will make you all the money. And that is the shift no one is talking about. We are fiercely local at the Trillion Real Estate Group, and it is an honor and a privilege to be working in this market.